Welcome to the Modern CPA Success Show, where we're 100% focused on helping accounting firms achieve success. If you're an accounting...
Hello, everyone. Welcome to today's podcast. Today we have Jamie, Jody, and Adam again here from Summit, and we're talking about the loan forgiveness on the PPP loans. So hopefully over the last couple of weeks, and I know they just issued some new money out there, but a lot of loans have been given to people for these PPP loans. And so we want to talk about how to get the most forgiven. So that's today's topic. And Jody, I'll start with you. What kind of expenses are included in that forgiveness?
Yeah, good question. Expenses including the forgiveness. So when we're looking at the PPP loan, we have to kind of back up a little bit and kind of explain how the forgiveness is actually even taking place. And so once you've received the loan, you basically can use, payroll, mortgage, interest, rent, and utilities and benefits for your people are the primary expenses that they allow. And what they do is they look at that and they say, hey, you have to have up to 70 or at least 75% of those expenses have to go towards your actual PPP loan. So if you and then no more than 25% of what you claim as an expense for payroll would go towards the rent and the other stuff. So what the idea is, they want to make sure that we're paying our people and continue to keep people on the payroll versus having them go on unemployment. And so that's the reason for the stipulation there. Now, how banks are going to look at that, that's going to be kind of different. We don't know if they're going to take a hard stance and say, hey, you can't have more than 75%. The way it's written right now, you can have 100%, but we don't know what the different interpretations and everything. So that's kind of coming out, and I'm sure that will be addressed here probably over the next few days as we go through this 8-week period. But when it comes back down to the types of expenses, again, payroll is the major one. So you're looking at your payroll for that period of 8 weeks, and then you're also looking at your retirement benefits, in a similar way you calculated the actual loan dollar amount. So you're looking for that. And then for utility expenses, you're looking for your electric bill, your internet. And they also say, I'm reading that you could potentially even take your telephone expenses, which I'm sure they'll clarify that, what that actually means over the next week or so. But telephone, utility, gas, all that kind of stuff, all your utilities. And then I would say on the rent side, you have to make sure that you have your lease in place, so that that has to be in place prior to February 15th. You'll need a copy of that, I'm sure, because you'll be able to take that dollar amount for the rent within that period. The one thing I would say is don't try to game the system. Don't take like 4 rents, something like that. The government's really, really looking at these and starting to scrutinize these things to make sure that you're truly deducting or taking against the counts that you really deserve to take. And plus, did you qualify for the loan? And if they see that you're taking, 4 months worth of rents, or if you're giving all your employees $30,000, $40,000 bonuses to get them to that dollar amount, then they're going to say, hey, that's not the intent of this. Bonuses are allowable, incentives are allowable, but making sure they're within reason. Don't be crazy with things. Don't take 3 or 4 rents in a month. That sort of thing I think is really important. So I guess those are the expenses that I would look at. Do you guys have any additions or subtractions for me to that?
Yeah. So a couple clarifications, because I know there was some misinformation out there about whether it was net pay or gross pay. So definitely gross pay, right? We're all on the same page with it's gross pay, meaning not after. There were some banks out there saying, hey, you got to take it after their federal withholding. Not the case. The other thing is state unemployment tax qualifies, right?
Yep.
So your state unemployment, your SUI, if you're looking at your payroll tax reports, and then whenever you were talking about like employer benefits, like your 401k match, that's just the match portion, not the employee share. So make sure that's distinguished. And then your health insurance, and health insurance would include dental and vision. So anything that's like the section 125 would be included. So that's just the health, dental, and vision insurance. Those all go towards that 75% bucket, right?
That's correct.
And one common question we've got a lot is about contractors, and contractors are still not included in that forgiveness part, correct?
That's correct. Originally they were, and then they decided, hey, that's not how we don't want to double pay them. So yeah, they took them out.
Great. So Adam, we obviously listed off a lot of things there. So I think documentation is going to be super important here. So do you want to kind of talk about what we're talking about with our clients in terms of keeping all this documented over this 8-week period?
Yeah, just really the payroll reports. We think that it'll probably be, to Jody's point earlier, he was saying don't run 4 rents. We assume that it'll be kind of accrual based, meaning it'll go by the pay period. I assume they won't make us like go out and change our pay periods to sneak in a payroll right at the 11th hour to get it into the 8-week window. So having your payroll reports, what we're recommending to all of our clients is to keep track of all these bills as you pay them, put them in a separate loan forgiveness folder. So as you're paying your utility bills, put them in there. If you get a bill for rent, great, put it in there. If you don't, just make sure that you have a copy of the lease that spells out like what you're, and of course, as Jody mentioned, it has to be a lease that was in effect before February 15th. Otherwise, that won't qualify if it's like a self rental and you've bumped up the rent since then. And then those payroll reports. And then we're also telling clients like just to track the forgiveness amount as they go. So it's really important to, we gave all of our clients a spreadsheet to track all this, but I think we're going to elaborate a little bit more on it and have the people individually, like, so week by week, even if you get paid bi-weekly, we'll have you break it down into a weekly basis, put the hours down, put the dollar amount, and then that way you can track your head count for the 4 weeks and track your totals. And then the supporting documents for that will be the payroll forms. The problem is, of course, is that the banks will have all their own, every bank will have their own form, their own requirement. So don't think you're going to get out of anything by doing this. The nice thing is you'll already have it kind of figured out and you'll already know what your forgiven versus unforgiven portion of the loan will be. And then you can just, enter it really quick on their form.
I think with that point, like the tracking it as you go is super important. And I think, again, Jody said we don't want to be gaming the system, which all three of us agree with here. But at the same time, you want to make sure you know where you're at. So if you're in week 4 and forgiveness is a lot less than you think, and you're thinking about making a hire at that point, it can help you make an educated decision there. Well, okay, what is this hire going to do for my forgiveness, or other things like that? So it is important to make good decisions with this loan money, but you don't necessarily want to game the system as well.
Yeah. And I think in terms of like the bonuses are really important because whenever I don't know about the two of you, but what I'm seeing with my clients is there's like a small unforgiven portion just because for those clients that don't have a high amount of rent, because having 25% is nice for rent. But if you're not in a high rent district, it might be one of those situations where we're just naturally going to have this built-in unforgiven portion, which for some clients, as we know, the unforgiven portion is a loan. It's deferred for 6 months, and then it turns into a loan paid over 2 years at 1% interest. So kind of a good deal, but one of those things where we'd prefer to be forgiven. So the bonuses are kind of a big question mark, I think, for a lot of our clients. And as Jody mentioned, I think it has to be kind of a normal course. But we know we also can't pay an individual over that 8-week period over $15,300 and some dollars.
Correct.
So it's not like if somebody was already on pace to make $80,000 a year, you couldn't give, and they were going to make 13 grand or whatever the dollar amount is. You couldn't give them a bonus that's going to exceed that anyway because it's not going to qualify. So
yeah, you could definitely still give them the bonus, but only part of it would qualify.
Yeah,
I guess is what we're seeing there. Which obviously we don't want you to game the system there. So the $15,000 that 8-week period is really the maximum. $15,000, I think, is $350 or something like that, is the maximum you can make in that 8-week period. So even if you started somebody, halfway through the year and their commission ramps up or down, 15,000 is the max that they can make in that 8-week period. So that's real important to understand the way that the guidelines are written right now. Who knows? They may come out and revise those in the next 8 weeks and have better clarification on what they have. But for right now, it's simply that 15,003, I think 350 for 8 weeks.
Are you two having clients like ask contractors to jump on the payroll, or how are you, getting your head count up and your
Again, gaming the system. If they're on payroll, if you bring them on payroll, guess what? They're going to stay on payroll from here to eternity. So if you do something like that, great. The IRS, I'm sure, have no issues with that because they'd rather than be employees anyways. But they would continue on only as employees after that pack. Oh, the other thing I wouldn't do is I wouldn't raise all their income and to maximize your forgiveness amount and let them go in week 9. That also probably wouldn't be a great idea, just because, again, gaming the system there. So the idea is keep them off unemployment. So you just have to be real careful what your actions are within that 8-week period, because the worst case scenario is I don't really know what the worst case scenario would be if you got caught trying to game the system. It would be not very good. You'd obviously have to repay back the entire thing, and I'm sure there'd be major penalties assessed, and I'm sure that it would not be a good situation for you. So don't do anything really stupid. Don't give yourself some really big bonuses during that period. Play it out as you normally would, from a day-to-day perspective.
Yeah,
the
I
only
think back to your contractor question, Adam, real quick. I think what I've been doing is, again, not gaming the system, but I have several clients that have had contractors. They've been thinking about turning into employees anyways. And so, my advice to them is, hey, if you're going to do it, this is the time to do it. Might as well get the benefit for them because you're going to obviously move them into an employee, which you were thinking about doing in the first place, and you'll get more of this forgiveness. So I've had a couple of those conversations with clients that I was aware had those type of contractors.
And I think it's also important, like maybe you do have like a little short stint project that you want to get accomplished over the next like 3 months. Instead of hiring a contractor to do that, it's just a short-term employment engagement. You know what I mean? Like they know going in that I only need you to complete this thing for 3 months, and then it's on the payroll. It helps with the head count. It's covered under the forgiveness portion. The other more creative thing that I've seen for people that are, maybe applies more to like hourly folks or people that are on the front lines is hazard pay premiums for hourly folks that have, make sense for people that are, maybe not on this listening to this podcast, but that's one of those things you hear circulated as well.
And I think that could go for anybody, not just on the front line, but anybody coming back to work and they're not 100% sure they want to come back to work. You give them an incentive to come back, a financial incentive, just because maybe they feel, even if you're working in an office, that hazard pay, could be justified in that case.
Yep, definitely. Okay, so Jody, could you touch on the timing of the forgiveness for us? So I know that obviously there's the 8-week period here, but if I want to get that forgiveness, what are the steps I'm going to take, and when do I need to take those steps?
Yeah, so I guess right after the 8 weeks, you need to then approach the bank and start gathering all your information. Ask them what the information that you need, and that's going to vary again dramatically from bank to bank. I guarantee it. So whatever bank you're banking with, you just kind of fall by what they want, and so you'll gather that information, you put it in a file form, you give it to them, and then afterwards they've got 60 days to forgive that or to make a determination on the forgiveness of the loan. So you got about a 60-day window afterwards in which you'll technically have a loan on your books at that point all the way through, and then 60 days after, then part of that loan or all of that loan or none of that loan will be forgiven, and then you'll be notified at that point the reason why.
Okay. And then once you know what's not forgiven, how are we recommending people work with that the difference right there? So Adam, I'll start with you on that. So if I have a $200,000 loan and only $150,000 being forgiven, what are we recommending doing with that $50,000 difference there?
Yeah, that's a client by client determination, but in some instances where they haven't been as impacted, there might be an opportunity there to pay that back is probably, the first one. And then other people that have either been greatly impacted, because the loan, it took a little while to get. So people's cash reserves might have been impacted pretty tough beforehand. So people will use that as a buffer, for the next year or two, just to kind of help with their cash and, cash reserves.
Yeah. And I would also add to that, there's so much uncertainty out there right now, even when people are coming back, just because you're cash heavy now, potentially, or maybe you're in a position where you think, I don't need this money now, I'm going to go ahead and send it back. I would probably still hang on to it for a little bit because there's really so much uncertainty. You really don't know how things are going to be impacted 2 or 3 months down the road. You might end up needing that money. So I wouldn't necessarily put yourself into a hole, but keep it there because it's such a low interest rate. 1% is very, very low. And so it's definitely, in my opinion, worth the risk on keeping it on the books and paying a little in interest just to make sure that you've got the money down there. And then maybe in December, if everything's recovered and you're feeling great, then go ahead and pay it off by the end of the year. But I would definitely hold on to it and keep it in your cash reserve for at least
because there's no prepayment. Yeah, there's no prepayment. So there's no real, it's not like you have to make that decision within that 60-day bank period.
Right.
Yeah, so I'm telling my clients, it's not like this is a payday loan where it's like this really bad loan that you want to get off your book as soon as possible. This loan is pretty favorable for anybody that has it. And again, we have several clients that were in not a great spot prior to this, and so any non-forgiveness they've found on this loan is going to be a pretty nice sized loan for them to pay over at a pretty low percent. So I think we've been talking to them about that as well. So the last question, so related to taxes. So obviously there's forgiveness portion of here, which we know is going to benefit us greatly. Do I need to pay taxes on the part that's been forgiven? How's that going to work?
Luckily, no. So there is no taxes on the forgiveness portion or taxes on the expenses that you're using against it. So the government has made this a completely tax-free benefit for you as a taxpayer that received this money and received it in the manner it was intended to be.
Great. So that's going to be really nice because again, you're basically getting a certain amount of revenue for these 8 weeks that are going to help you pay for those expenses. But again, you're basically getting that tax free, which is not reducing it at all. So that's a great advantage to this. So any final thoughts? Any other things that companies should be thinking about in terms of this forgiveness?
The only thing that we're kind of still uncertain about is the employee headcount and how that's going to be taken into consideration. Because keep in mind, there's always two parts to the conversation. The first part is keeping the employee wages to a certain dollar amount. The second part is keeping the employee headcount to a certain dollar amount. So we know what the headcount's going to be at the end because you've got to have X amount of people at the end of your 8-week period or in June 30th to determine where the headcount falls on the top part of the calculation. We're just not 100% sure on the clarification on the bottom part, so I'm sure that will be coming out fairly soon. It's my understanding that if you just started in January, February, you use those numbers, employee headcount there, the average. If you're seasonal, you use last year's numbers during this period, and then for those people that aren't seasonal, we're not sure if you're using December 31st numbers, how it was determined, how your payroll loan was originally determined, or if you're using February 15th numbers. There's not a ton of clarification on that out there yet. And I'm sure, again, that will be something that will be coming down the pike as well.
Yeah, we expect some additional guidance coming out here any minute in terms of like the real, true, kind of the final questions people have on this forgiveness. So hopefully that comes out soon, and we can do another podcast on it, or it'll obviously be on our website. Anything more we find. Great. So that's all for this show. I appreciate you guys joining us. I think this is a great topic. Obviously, a lot of people have been talking about the PPP part, and now it's the second part of it. We really have to think about how we're going to get the majority of that forgiven. So appreciate you guys joining, and great show.
Thanks.
Enjoy this episode? Visit our website at summitcpa.net to get more tips and strategies for achieving modern CPA firm success. We're here to be a resource in this ever-changing industry.